got on the phone and I
Yeah.
told them that I want to put a sell order.
Mm.
And when I put it in, within 3 minutes, someone somewhere purchased those shares. I was hooked then. Mate. I couldn't believe it. So.
Welcome to what we are now calling it the Investment Candle Podcast.
Yeah.
My name is Chipiwa Mjerere. I'll start by introducing myself in terms of what I do.
Yeah.
I think it's a good way to start. I'm not alone. You'll hear him in a moment.
Sure.
As I've already said, my name is Chipiwa Mjerere.
Yeah.
I work in private equity space. I've got also experience in asset management, and I started my career in auditing.
Yeah.
So that's just a bit about myself. I really love investments, and yeah, this is why we started this. But like I said, I'm not alone. So yeah.
Yeah. No, thanks, Chief. My name is Nico, and I'm actually not in the investment world currently.
Yeah.
My current occupation is in the tech world.
Yeah.
So I apply my trade in the tech world, and you might be asking yourself, where does it fit into all of this? I do have investment experience, but not in the formal sense.
Yeah.
In like my investment experience comes from my own private investing.
Yeah.
So I've had to actually take my own money and actually do that, learn that, YouTube. And yeah, at the moment I'm in the tech space. I work for one of the biggest e-commerce firms in Africa.
Yeah.
But before that, like you, I did accounting and I did a bit of time. And
I feel like my circle is full of accounting people, man.
You gotta enlarge your circles, mate. You gotta enlarge it, bro.
Yeah.
Yeah.
I feel you.
Yeah, but quite similar to you. I have an auditing experience and an auditing background.
Yeah.
I started off in the public service. So auditing in the public service, you can somewhat join the dots to see where I actually did my articles. I didn't finish my articles.
Yeah.
But I abandoned them and then I continued my investing. And yeah, so this is where we are. This is where we find ourselves.
Yeah.
Yeah, man.
No, man. I think it's good to kind of give the color in terms of why we started this podcast, right?
Yeah.
I'll take a first step at it, and
Sure.
then we're more than happy for you to jump in.
Yeah.
I think really the idea was just to kind of share the investment ideas and kind of bring to the streets what's out there professionally, right?
Yeah.
And make sure that any man in the street kind of understand this language of investment and how they can actually access it. Because I think it's always the biggest question. I always get asked, where can I invest? What can I invest in, right? And I think we've learned a thing or two in terms of how we can do that.
I mean, just jumping on to what you said about people always asking. I remember once I got a call midnight from a chap from the Eastern Cape. Calling me to ask what share should I buy tomorrow when markets open.
Yeah.
What share should I? And this was 12 o'clock. So like what you're saying, it's like it's real.
Yeah.
And this person here does not come from a financial background. In fact, the formal sense of shareholding and shares and investments seen on TV.
Yeah.
So no, I think it's absolutely powerful that we've got the investment candle. Hopefully we're gonna light the way as a candle does in the investment world. Hopefully people can learn and join us in the journey. And I'm excited for it, man.
I'm really excited too. I think we're gonna have some interesting conversations.
It's gonna be good
around this. So maybe just to get started, like I was thinking about this last night, and I think just to what have been your investment journey? Like what did you start and what kind of initiated the ideas to have this interest in investments? And by investments, I mean anything that you've embarked on in order to kind of gain some money on that.
It's quite interesting. The word investment is very big. The investment world is very large. But how I got started, it was shareholding. So actually purchasing of shares in listed companies.
Yeah.
But my first listed company, it was not even a listed company. It was a subset of a listed company.
Yeah.
And that was, I think it was Vodacom, Yebo Yetu. So that was a BE scheme.
Yeah, those are old times, man.
Old times, yeah. In fact, I think
are we trying to reveal our ages here?
No. We can. I have no issue with my age. And I think it also just it also helps my credibility because I can say that I've been investing for more than 10 years.
Yeah, you've got some experience under the belt.
Yeah. But it started off with my dad. I've got 3 brothers, and he purchased Vodacom Yebo Yetu shares for us. 2,500 each for us 3. So me, my little brother, and my older brother. And that's the first interest into the formal market that we got.
Yeah.
But we didn't really know about it. We just heard that it's actually happening. And then where I became woke, when it hit me, it was when I was in varsity. I went to UJ and was it business studies or commerce? One of the two.
Yeah.
My lecturer, he told me to go beyond the classroom.
Yeah.
And because I was blessed to have done my education in Johannesburg, I was close to the Johannesburg Stock Exchange.
Yes.
So I went there.
I remember I always wanted to be in the JSE building. Man.
Really?
Yeah, like I've always wanted to be in that space because they used to always have this events when I was in varsity. But because I was stationed in Cape Town, I never really got a chance to kind of attend.
You see, that's what I'm saying. Like, I think it was a blessing because I know there are many people like us who wanted to actually go and see this place.
Yeah.
The picture that I had in my mind of a stock exchange was people screaming out everywhere. And so I got a chance to not see that, but because it was very formalized and it was technology based.
Yeah.
So people can do all their trading all over the world remotely. But going back to the story is that I went there and I realized that my dad actually purchased the shares. And I asked him basically to take them over, to commandeer it basically. And I sold those shares. So over about a 10-year period, from 2,500 Rand, and I ended up selling them for 7,500 Rand, which is nice.
That's a proper gain,
over 10 years, which is very, very nice. And I remember the way it happened even. I spoke to the broker on the phone and I told them that I want to put a sell order. And when I put it in, within 3 minutes, someone somewhere purchased those shares. I was hooked then. I couldn't believe it. So imagine like a system on which you can actually invest 7,500, but we're going to speak about the mechanics of it. Put in 2,500 Rand and get back 7,500 over 10 years, which is very, very important. The time period is important. So that's how initially it started. But I'm keen to hear about how it started for you as well.
Yeah, I think for me, what really started is I'll have to go back to high school, man.
High school, eh?
Yeah, for me, it really started there. I was torn between choosing between the CA program and the actuary program. I mean, it's always
it's usually the case. And folks from Limpopo who are smart, that's the route.
Yeah, and then I had a discussion with a couple of people, and I was like, no, man, CAs are more prone to be businessmen.
Yeah.
They're more prone to be walking into boardroom and stuff like that. And that's where I got the interest to be a business person, right? And then when I came to UCT, I did the investment challenge, the JSE investment challenge.
I did it as well. I also did that thing.
Man, that thing got me hooked to a point where every single morning I'm there checking like, okay, how is my portfolio moving? What can I add? What can I reduce?
Do you remember your portfolio?
No, I'd lie actually if I say I remember. I don't remember, but I think one stock that I remember that it was there, it was an MTN stock.
It was an MTN stock?
Yeah, it was there.
May I ask, what did you see in MTN there? This is early.
Yeah, look, if I say I had a very proper strategy to invest in MTN, I would lie to you.
Yeah.
I'd really lie to you. But I think, you know, as an accountant, you kind of, delve into the numbers a lot and try to be smart about revenue projections, earnings projections, and all of that. And that's really what perhaps I had in mind when I invested in MTN. And there was a lecturer that was... he was very, he did a valuation on MTN, right?
Yeah.
And when he did a valuation when we were in first year, by the time we got to honors, his value had, he had like his value had converged to become the value that he think was going to be in 4 years time.
Interesting.
So he was so proud of it to a point where you'd always bring it up in lectures, right? It was an example for the valuation throughout the valuation lecture.
Yeah.
And the valuation lecture takes different parts, right? Yeah. There's discount, there's all of that. So he was making MT an example throughout all those different parts. So from that, I really loved to kind of enter into the space and know more about it. I'd always read news every now and then in the morning.
Fantastic.
And Fin24, it would be my, everyday visit on the website and stuff like that. So that kind of ignited the interest in investments.
Man. I see many parallels here, mate. We both had a lecturer who kind of like assisted, played a through pass for us.
Yeah.
And like we also started young.
Yeah.
And I would actually like to deal with that. But how important is it to start off early? But also at the same time, not discounting if you've gone past the early stage, it's never too late. Can you just speak a little bit about that? How important is it rather to actually start off early?
Yeah, I mean, starting early, I think would be good, particularly because one, we don't have enough money to actually invest, right? So those little $100 that you can put into a certain stock, and then you can add as and when you believe that a company is going to grow. Because really, particularly what I think, I mean, we can delve into the strategy on how to invest, but it's all about the growth, right? The growth that you see in the company. So one, I think it's very important to start early, bearing in mind that not everyone can afford to do that, right? But if you're thinking about investing, and it's one of the areas that you've got very keen interest on, starting early is important.
Yes.
Because you don't want to be sitting in a very not late age, in a very later years, and you're trying to pump in money to kind of grow that in the thing. I think it's a patient game, right?
Yes.
That you actually have a long-term view on things.
Yep.
So starting early, I think, helps with building that capital in order to have a significant stake on the business.
Yeah.
It's good to learn early when you're not busy, because when you're young, you've got
time.
Not so much time, but you've got time to actually really invest in it.
Like hitting on the point of actually starting early, the first ever AGM. Now, for those who are listening, an AGM, an annual general meeting, is what a company has every year, normally a few months after the end of the year financials have been released. They invite their shareholders and they basically discuss the performance of the company. The board of directors are there, the chairperson is there, the big shareholders are there, and they basically just discuss what happened. The first ever AGM I attended, I arrived late. It was in Pretoria. It was a company called Finbond. The small, it's a mutual bank. So Finbond, they listed, and I remember the share price was around about 3 rand. So I bought a lot, 3 rand. And when I arrived there, I saw a little girl.
You were really into this thing, even attending AGMs.
I attend AGMs. Mate, I promise you, like everyone that's gonna tune into the investment candle, of which I hope there are many people that actually buy into this thing. I will tell them, and I'll tell them the story. To start early. So there was a little girl. She was around about 5 years old. I'm telling you right now, 5 years old. She was not even old enough to go to grade 1 yet. But yet, her parents purchased a 3 rand Finbond share for this little girl. And because she was a shareholder, she was allowed in the room. She asked the chairperson of Finbond questions. So can you only imagine that if you're 5 years old and you already have that experience of speaking to board chairs, what's going to happen when you're 25 years old? Just sticking at it, slowly but surely building up your portfolio. Just to back up your point that it's very, very important.
I totally agree.
To start young.
It's really, really important to really start early. Like I said, it really builds that capital, because one of the issues that people raise all the time is, I just don't have enough money to actually invest. And what will me buying R1 share make any difference, right? But R1 shares, if you accumulate all the, like in a year, how many R1 spares can you have, right?
Yeah.
And you keep on building those, even though sometimes there won't be that capital gain per se, but maybe some dividends will also, you'll reinvest the dividends that comes in, right?
I want to stop you right there. Dividends. We're going to get into it a little bit, but can you just explain what dividends?
Yeah.
What is dividends?
So dividends is just money that companies are trying to return to shareholders, a reward for the capital that they got. So in a nutshell, I think that's what dividends is.
So just by virtue of you actually having a share in, for example, company X, they declared they've had a phenomenal year. They need to have a good year. They need to be profits. They need to be distributions in order for them to distribute, right?
Yeah.
So just by virtue of you having a share qualifies you to actually earning a dividend.
Yes.
It's a fantastic way.
Yeah, but I mean, obviously, it's not a guaranteed thing.
It's not.
This is not a repayment of loan, right?
Yeah.
It's when the company believes that they've retained enough money to find future growth, and they feel they can reward their shareholders for the patience and sticking around with the business, and then they return some money to shareholders' pockets, right?
Yeah.
That's pretty much how I understand it.
So I would actually like us to deal with the issue of what has been our best investments that we've ever made. I think that can be a cool story. One of my best investments was actually a dividend investment.
Is it?
It was Exaro.
The mining companies always pay huge dividends.
They pay huge dividends. Hey, I'm talking about 10%. I'm talking about 11%, obviously pre-tax.
Wow.
But I mean, like, if you do that in 2 consecutive financial years, and remember now, the share price post-dividend, it recovered fully to what it actually was before the dividend.
Yeah.
I mean, that's fantastic. That's a clean getaway. I call that a clean getaway. What has been your best? In fact, give me your top 3 best investments you've ever made.
I think I made a lot of money through Sasol.
So might also involve Sasol.
You remember that time when Sasol went down? Eh?
Yes, of course.
That's really the time when I made some significant money on Sasol. I really added when there was a slump on that share, not share price.
I remember that.
Yeah.
Unforgettable, hey?
It was really some proper money. And another one is Capitec as well.
Capitec.
Yeah. Capitec. It really made me some really good money.
Where did you catch it? Where did you catch it, and where did you sell, or have you sold?
Yeah, I've sold completely out of Capitec. I needed to take care of some few things. So I've sold out completely.
Yeah.
But that's in terms of money.
Yeah.
But in terms of being a phenomenal business that I think I can hold long term.
Yeah.
Shoprite.
Interesting.
Yeah. Shoprite has one of the best business model that it's easy to understand. It's easy to follow. And just in terms of being a retailer, those guys know how to be a retailer.
Yeah, they do.
Like it's one of the most impressive business in there.
It's impressive.
Like I just can't. I was an analyst in my asset management days.
Yeah.
Right, and I used to cover retail as well. But I used to get excited when I was asked to talk about Shoprite.
Nice.
It was just such an amazing business, man. Like, I mean, I don't want to delve into the details.
No, we know, and by no means we're giving financial advice. We're just explaining our stories. Yeah.
But that business, man, it's just amazing in terms of how they understand the supply chain.
Yeah.
Of how they solve the problems and stuff like that, and onto the sale and distribution side.
Yeah,
it's just amazing, man. It's just
beautiful.
An amazing business.
No, it's beautiful. Like, I think every single investment that you mentioned, I've also got some sort of a run-in. With Shoprite, I recently read Whitey Bassone's biography.
Yeah.
called YT. And he explained basically how he built Shoprite from 8 stores to more than 200
stores. Yeah.
It's fantastic. It really is South African excellence, isn't it? It's Africa's version of Walmart.
I agree.
So you say that you want to keep the thing for the long term.
No,
right?
I'm saying I will definitely. I still have some shares in that. I'm definitely keeping that for long term. That's my long term investment. I think one of my strategy is to think about what is the business that I can hold for long term.
I hear you.
I'm more of like a long term investor than
I see.
than a a trader, because I mean people want to make quick gains. I think for me that is a very difficult task to do. But over and above, I think I just wanted to find out, like, what are other investment avenues that you've explored other than
the
shareholding and shares and stocks and stuff like that?
Well, okay, I'll be honest. I've actually just dealt with shareholding. As far as the formal start, okay, yes, I did. In fact, let me actually answer this thing properly. Shareholding, equities, as well as ETFs. I remember I also held ETFs. And for our listeners and viewers, because we've got a video here, ETFs are exchange traded funds.
Yeah.
So basically, it's like a basket of shares which have been compressed into one financial instrument. So basically, it's
that's
like
a beautiful explanation.
That's what it is, isn't it?
I mean, we get stuck on the finance lingo to a point where, you just explained it so well that even if I didn't have finance background, I definitely would have understood that.
Nah, excellent. It's like a lucky packet of shares, which obviously are weighted by how big they are individually. So, for example, let's say the top 40, whichever issuer of the ETF it is, top 40, it's going to be a top 40. It tracks an index, and that's what it does. So,
and what is an index?
How can I explain an index? Bro, can you explain what an index is?
An index is one of it's exactly like an ETF, right? So it's a group of stocks or shares of companies where they're in a specific industry, like top 40 by market capitalization.
100%.
Say all share index that kind of includes all of them.
Finny 15.
And like it kind of follows a certain category. They group the shares into a certain category.
Yes,
that is what an
see. This is the beauty about the investment candle. Like, we're being shown the way. This is good. This is good. Like, I actually was thinking about it. Like,
and I think it's a very sorry to cut you, but I think that the index is a very low risky environment, in my opinion. Right?
It is, of course.
It's kind of like a unit trust.
It is.
I hold a lot of unit trust, not a lot. Scratch that. But it's one of my, instead of putting money on a fixed deposit in a bank, right? I'd rather take my money on unit trust, right? Because I get exposed to the different investment instruments, right? Because it's pooled money that gets invested in different investment instruments. That in debt, that's in equity, that's in ETFs, that's in property, etc. Right? So I hold that as my saving kind of.
I've got a question for you though. So if you hold that as kind of like your savings wallet, rather than, I see it's safe, but does it beat the security of a fixed deposit? So the security of your money, and another one is fees. Very, very important. How are the fees of a unit trust? Because normally my understanding is that there's going to be a manager, normally a person that actually manages that pool of funds. And this person here lives in Camps Bay. They have very shiny socks. They've got nice shoes. They drive a nice Mercedes Benz.
They need those fees, right?
and that's how they basically finance that type of life. It's through fees. What are your thoughts on fees and also the security?
No, I mean, obviously, I think fixed deposits in a bank, it's more secure than unit trust, right? You don't stand a chance to lose your capital in a fixed deposit, right? You just put your money in there. You guaranteed the interest. They tell you your money is locked up or for certain period, and that's it. You know exactly what the gains and the return on investment is going to be, right? But with unit trust, it's a completely different, right? Because that's investing. I think that's where the difference between saving and investing comes in.
Fantastic.
Because saving is you saving your capital, right? And your capital is guaranteed. Your returns are defined. You know exactly what you're going to get. But, with investing, you stand a chance of losing your capital.
Yeah.
Or portion of your capital.
It's true.
Right?
It's true. Yeah.
So the reason why I prefer unit trusts is that they have a very high chance of beating inflation.
Fantastic.
Right? So that means that my money is actually growing in real terms. Right? I'm not getting worse off because, if my investment is going to be 5% return and inflation right now, it's like 7 to 8%.
Yes.
It means that I'm losing out,
In fact, I think a more stark explanation of that what that means, if you are not beating inflation, literally, you are getting poorer.
Yeah.
Because the standards of living and costs of goods and services get higher. And if it doesn't meet that bar, then what does it mean? It means you're getting poorer.
Exactly.
So I think you hit an excellent point about beating inflation, and that is my message basically to anyone that wants to ask me about anything. It's not financial advice, guys. Very, very important. But
it's just two mates chatting.
Yeah, we just
about our experience.
We're just chatting, and some family members just like they want to get your thoughts on that. And the first thing I tell them is this thing, whatever you're going to be investing in, it's legal. Hopefully, it's legal. Very, very important. It must beat inflation.
Yeah,
I think that is the bar. That is the thing that it must meet. At least meet, let alone beat.
Yeah. At least meet. Yeah. No, just on your point on fees. Obviously the fees, they do eat into your money and your returns.
No, they do. Yeah.
But I think it still gets to a point where it's better.
Yeah.
Like I said, investing is a very long-term game, in my opinion, right? You really need to be a patient investor when you even in unit trust, they're a little bit low risky than the stocks that we were talking about.
Yeah.
Because it's more diversified. You're not exposed just to one company.
Sure.
And it's managed by someone else. I guess it's gonna talk to the difference between an index following fund or an actively managed fund. What's the difference? There's big debates on that.
We're gonna get into all of that.
You just follow the index, or do you get we will delve into that in later stages. But definitely your fees does eat into your money. But I think for me, what I've seen so far, I still get better returns than I would have just putting my money on fixed deposits.
Fantastic.
Maybe let's talk about the platforms that we've used in terms of
platforms. Very, very important. So, okay, for me, I had a broker, but this was before
fancy.
No. Like my dad knew what he was doing. Eh?
Okay,
he really did. And quite interestingly,
yeah.
Is it my first year or my second year? I forget. He actually sent me to varsity. I didn't have a scholarship.
Yeah.
I didn't have a bursary. My parents funded my studies.
Wonderful.
But how he funded his studies is actually quite inspirational. It's because of the dividend that he had on MTN shares.
Wonderful.
Very interesting.
Wonderful.
Yeah. Like, make that what you will. But that's how I got through. I think, was it first year or second year? It was because of good investment in a good company. And we saw the results of that. But getting to what you're asking, and that's about the different platforms. I had a broker, but there's this company which launched this platform called Easy Equities.
Yes.
Now, I'm not doing an advertisement on their behalf.
Yes.
But as the name suggests, it really is easy.
Yeah, it is definitely.
So I like that angle to it. That's the one that I use. Even now, okay, a little bit of it now when I play around with it, and I use the word very, very loosely, play around with it. It's investment is serious business, but it also can be fun. Yeah, so I use that. I'll tell you as to why I actually use that, and also through my bank as well. They normally have stockbroking services as part of my banking package. So that I normally either switch between my broker, but that's for more serious type investments such as my pension and retirement. But out of my just own retail investment schemes. Definitely easy equities. In fact, the best trade I've also made, it was through easy equities, and it was also Sasol. Interesting story.
It made a lot of money for many people.
It's incredible. Like I'm sure you won't mind me telling his story. And my little brother actually told his story.
By all means.
We invested together, and we caught it at 34 Rand. It bottomed out at about 27 Rand, but we caught it at 34 Rand.
I caught it at $100.
You caught it at 100. We caught it at 30.
I caught it at $100.
We caught it at 30 and we watched it ride all the way up to 120. All within a space of 4 months.
Man.
Incredible. So that was my best investment, and it was made through easy equities. Let me just get through the reason as to why easy equities is better, especially if you're starting off. If you are a novice investor, if you want to get into it, I think it's the best platform. So number one, you get partial ownership of shares. Very, very important. Meaning that you don't have to have the full, let's say for example, company X costs 100 Rand a share. You don't have to have 100 Rand to own a piece of the financial benefits of the movement of that shares. So if you have 50 Rand, if you have 50 Rand, you can invest in that share, but obviously you're not going to be owning a full share, which that takes away maybe your privilege of actually participating in an AGM. But as far as performance is concerned, you have that. So that's the first one, partial ownership of shares. The second one is fees. Very, very important. Fine prints. That's 0, something percent.
Very important.
That thing can eat up into your capital gains. So it's very, very important. And I also like the fact that it was easy, man. It was intuitive. So things like that and there's also an educational element into it. That's what I prefer. But you have to do it with a broker. You can't just rock up there at the Johannesburg Stock Exchange or the Cape Town Stock Exchange.
There's a new one, yes.
Yeah. There's one here in Woodstock.
And there's a lot of companies that are actually doing a secondary listing into
it's true. Yeah. It's true. They're definitely doing that. There's, if I remember correctly, was ZARX, was it later?
Because I think there's one of the big bank as well also listed on there.
It's true. I remember there's a stock exchange that recently lost its license. I just forget the name of it. But going back to the story, you can't just rock up there and on a stock exchange and say, can I please have 50 Naspers shares? Can't do that. You need to go via broker. And that's where these sort of platforms, or you can have a broker in your bank. You can ask your bank if they have stockbroking services. Those are the different platforms. What platforms do you use?
Yeah, I think I use similar platforms. When I started, I was using my bank app at Standard Bank. That's one of the banks that I've used. They had very nice services in there. I got referred and I think for me right now, in terms of my portfolio, personal portfolio, it's not equity or /stocks concentrated. It's more towards startups.
Interesting. Very, very interesting.
I know. It's just a game. It's just a place where I think I thrive well in startups, right? It's a very risky environment to invest. Extremely risky. I've lost a couple of money. And I still want to do it again. I still want to do it again. You know why? Because I think that's where you can make a lot of influence, man, as an investor.
Wow.
As an angel investor, right? You're coming in, a business is struggling with certain things, and then you can offer your valuable opinion and some of the experience. I mean, I've been in business and I'm an accountant, right? So I can easily help the business in terms of tax compliance, in terms of all those things. It's that value add, right? Over and above the money that I can put into a startup, right? I can help them set up a business in a way that it's more a machine rather than dependent on certain people. They have routines, they have organizational structure and stuff like that. And You know this. That's how auditing teaches us, right?
It's
Those
true.
control testing that we did.
Trauma.
Those control testing.
The trauma.
And all those things,
Yeah.
you know. I think for me, that's kind of the platform that I really love to play in a lot than the stocks. I still love equities, but I think right now I've had a huge interest in startups.
Have you actually executed any investments in any startups? You don't have to give names. You can if you want, but
yes, I have.
You have.
I have actually. Two of them. Yeah, I do hold two in two startups.
And like you're not a passive investor. You're an active investor.
In one, I am an active investor because it's very early age.
Yeah.
Early stage.
Yeah.
But in one of the other one, it's not really too early stage. But yeah, so I just put in my money, and if they do want that value add, I'm always available to provide.
Bro, I'm not gonna lie to you. You are probably the busiest person in Cape Town. I don't get it. Like not only do you work in private equity,
yeah,
you run your own thriving NPO.
Yes.
And also you're an angel investor. Also, you're a property investor. Hopefully, you can speak a little bit about that as well.
Yes.
Like, is there anything that you don't do? Just, I don't understand. Like, this is the first time, like me and the listeners and the viewers, this is the first time that we hear about you being an angel investor. I don't know this.
Yeah. No, I really love it. I think it's one space where you can really make a very meaningful difference.
Jeepers.
Like a very meaningful difference, because there's a lot of businesses out there that, I mean, we've got connections, right? Because we've worked in corporate. We know someone else that can kind of help some of the supply chain issues that the business that we invested in are currently facing.
Yeah.
Even just the mentorship, right?
Yeah.
We know someone that can help the entrepreneur to kind of, solve some of the problems or even relax, because entrepreneurs don't relax. Right? They're always on the path, right? And those are some of the things that, really gives me that burning desire to continue to play in that space.
Fantastic, bro. No, we need you. South Africa needs you. The world needs you.
I don't have a big balance sheet to invest.
listen. Like after this, I will give you a few numbers. I need you to call a few entrepreneurs. They need the capital injection. Please be an angel.
But one of the things that we've done with a couple of my friends, like you said, the property side.
Yeah.
So we came together with a couple of friends, and then we pulled money together. I've seen this in my circle a lot, right? You've got friends that come together and say, let's pull money together and let's buy property, right? That works, but there's certain downside on that, right? And obviously properties as well, in my opinion, or what I've seen is that the capital gain has not been that much, right? You've got property prices that have been on the downfall.
Jeepers.
Or even flat, right?
Yeah.
Because there's just a lot of supply. I mean, look at what Baldwin is doing.
Yes.
Right?
Yes.
Buying an apartment is no longer that rare thing, right? It's just properties everywhere, right?
Everywhere.
And obviously the pricing kind of like stays flat when you've got greater supply, like a large amount of supply.
No, it's like supply and demand, basic economics.
Yes. Yeah. So a couple of things is that, and also the fact that because people want to buy a lot of properties in a short space of time, they end up having a lot of people in that property stokvel or property fund that they're trying to raise, and that causes a lot of issues.
So where are the benefits? Because if you're talking about the lack of capital gains, if you combine that with the interest rates hike that we've seen, like as if they're never going to end.
Yeah, I don't think we are in the cycle.
We're gonna chat in our later episodes about interest rates.
Yeah,
but you combine the lack of capital gains also with very high interest rates. What's the point?
Yeah, I think, like I said, it's a long-term game. One, it's a long-term game, and two, you've got, if your return in investment annually, like those rentals that are coming in, and you're able to have like a long-term lease of like 12 months to 24 months, etc., that kind of makes sense, right? I think when you're investing in properties, don't expect 100% capital gain. We're no longer in the 1970s and 1980s where there isn't enough property and everyone is trying to move into that space.
Different time,
different times. We've got huge supply, so that's kind of that. So if that rental kind of makes sense, and obviously properties do have some benefits. I mean, depends on how you structure the legalities of your arrangement with your co-investors, right? If you put it in a company and you do a dividends of about 75% of your earnings, total net earnings, there's a tax benefit on that.
Oh, yes.
Right. So that whole 75% of distribution, it's deductible.
Fantastic. But this is for real estate investment trust.
This for real estate, You just have you have to have a rate. I mean, there's certain requirements that you need to meet.
You do.
But that's the benefit. That's the tax benefit.
I remember I used to own shares in a company which is teetering on collapse. It's a miracle that it's still surviving even now. It's a real estate. It used to be a professional landlord. That's a real estate investment trust, and man, I got burnt. It was terrible, and I think since then it hasn't been. I haven't had good experience
with properties,
with anything that's related to property up until I arrived in Cape Town.
Yeah.
Okay, that's when I saw miracles. I stay in Sea Point, and the stuff that I'm seeing there, especially in the short term, I know like there is emphasis over the long term, but the short term gains and the short term strategies and how people are positioning their property, they purchase the property, but then they put it on Airbnb, they put it on bookings.com.
But I mean, it makes sense. It's a holiday destination, right?
Yeah.
So you've got an influx of tourists that are coming from different areas, right?
Mate, I promise you, like rentals during the year, it can be, let's say, for example, it's an apartment. It can be 1,000 rand a night. In December, it goes up to 5,000 rand a night.
Yes.
And this is over the short term.
Yes.
You're saying that it makes sense, yeah?
Yeah, it does make sense. I mean, you've got especially during summer time, right? You've got a lot of people that are coming through in Cape Town. I mean, if you stay in Cape Town until like mid-December, you'll see how packed it is.
It's packed.
The traffic doesn't move on the N1 and the N2
because people still want to come.
You go to the beach, there's no space, right? And also, what's interesting about Cape Town is that throughout the year, there's always tourists. Always. Like, it's just fascinate me. Like, you could go to the beach on a Tuesday, and then you'll find the beach with so many people. Not packed, but still people.
A lot of people.
And that just fascinates me.
It's crazy.
I'm just like, okay, this means that this person is here. They've got accommodation. They've hired accommodation, which means someone somewhere is earning that money. They're obviously going to buy some souvenir when they leave. So it means that some businesses are getting that. They're going to be eating, which means restaurants are gaining on that and all of that. So it's just, we've got that holiday, what's the thing? Culture in Cape Town.
It's true.
So obviously, I think that's why Airbnb kind of strives.
Yeah, it does.
I don't know the stats, but I think they probably do. There's a friend of mine as well was telling me about the same thing, that he decided not to rent out his property for a long-term lease and put it on Airbnb. He made a decent money to
do the same thing,
to go on holiday.
I would do, and especially for me because I'm quite skittish when it comes to property. I would like to position myself more of a short-term player, especially because I don't have the patience like you do when it comes to property.
I do have
I must say it's when it comes to property, but when it comes to equity, something that I feel a little bit more comfortable with. That's when my patience starts expanding a little bit more. But as you were speaking about foreign nationals rather, how they come into Cape Town, it just got me thinking about inflation. It's almost as if we're importing inflation. Prices skyrocket. But I don't want to give away too much content for now. I think we're going to speak about inflation a little bit deeper in our future episodes. But
definitely.
But,
okay.
Yeah.
I do have some couple of questions that I prepared. Cool. I didn't send this to you last night so that you don't. It's so that it can be on the spot, you know?
Okay. Cool. But wait. Before you ask it.
Yeah.
I'm also going to ask them to you.
Yeah.
Is that okay?
Period. Yeah.
Cool.
Okay. Your top 5 stocks at the moment.
Jeepers. This is complex. You want this to be a quick fire?
Yeah, just a quick fire. I mean, in terms of the strategy on how you chose them, we'll discuss that on later episode. But I mean, just your top. Okay, let me rephrase that. Your top 5 all-time stocks.
Capitec, Sasol, Naspers.
Shoprite, yeah.
Santova is the logistics company. In fact, an honorable mention.
It's very diverse.
It's very diverse. I like the diversity, but it's quite interesting. A lady whom I know, who also does not have investment background, she actually introduced me to this company.
Okay.
Absolutely fantastic, but that's a story for another day. So yeah, that's my top 5. What's your top 5?
Yeah. No, I think just on that point in terms of introduction, I think what I do is that I'll never invest in a company that I don't understand.
Yes.
Doesn't matter how the value attractive it is, but if I don't understand the business model, I'll never invest.
100%.
But okay, cool. My top 5 stocks.
Yeah.
Number 1, Richmond.
Oh my word! I forgot about Richmond. I sharehold. I know some of the board members in Richmond.
Is it?
Ooh, okay. If they're listening to this, I'm sorry, guys. I'm sorry. Yes, I love Richmond.
Richmond.
Yeah.
Shoprite.
Yeah.
Capitec. What's the 4th one? Naspers.
Yeah.
And the 5th one is what's this mining company?
Mining. That's interesting. You mentioned mining.
Yeah.
Wait. Okay. So what? What do they mine?
No. I'm thinking about the name. I forgot what the name is, but one of the mining companies is on the PGM.
PGM. Is it Spanye?
Spanye Stillwater? Not Sibanye. I like Sibanye. But
I'm a big fan of their manager, the CEO.
Is it?
I'm a big fan. Yeah. No nonsense. No nonsense type of guy.
I don't know quite well. Is he new?
Neil Fruman. I think he's still the CEO. But yeah, now he's the guy that basically got Sibanye off the ground from when they defected from Goldfields. Build up Sibanye.
Goldfields.
It's Goldfields.
Yes, Goldfields.
Very, very interesting.
Yeah.
I had a loose relationship with the former CEO. I was friends with his son. We went to the same school.
Yeah.
I think it's seen better days. But my opinion. My opinion.
No, because I mean, we'll talk about the strategy, but I think the gold side of it, right?
Yeah.
It's a hedging industry for me, right?
Okay.
During turbulence and market volatility,
safe haven.
It's always like a safe haven.
Yeah.
Especially in high interest zone and stuff like that. That's kind of the space where I kind of like revert to.
Yeah.
But we'll talk about how to manage portfolio.
Yes. We're gonna get into all of that.
But this is interesting, man.
This was fun.
I'm excited about this.
This was fun. I enjoyed it, and I'm hoping that our listeners and our viewers can tune in and can learn and can engage. We're gonna get our social media going as well, so that we can get better engagement and actually, just grow, man. Like this thing must grow. I mean, I come from a tech environment. It's all about scaling. So even in the investment candle, now we're gonna put our back into it. We're gonna scale it. The further it goes, the better it is. So I'm very, very excited. And
I'm very excited. I think there's gonna be a point where I want to kind of pose a challenge to kind of our listeners or subscribers, etc. To kind of, we should have a guy we should have someone.
Yeah.
If they are a follower, and then the challenge is to, if your portfolio grows much faster than anybody else, there should be a prize.
100%.
Yeah.
I like that.
Yeah.
I like
that I think would be very inspiring in terms of the discussion, because at the end of the day, what we want to do is to kind of normalize the culture of investing.
100%.
Right? And kind of, it's in the name, investment candle. We're just lighting that candle for everyone to kind of have the light, so that when we light this candle, that candle can go and light another in the street.
Flipping fantastic. I absolutely am for that.
Is that good?
It's fantastic. It's awesome, man. It's awesome. This gets me excited.
Yeah, right.
Yeah, it really, really does. And I'm hoping it can get a lot of people excited as well.
Okay. Yeah. What's our outro? We just say, cheers, bye-bye.
Sharp. Thank you so much.